Hey YouTubers, how you doing? I hope you're doing great. Let's make your day better by moving to the part 2 of the video on how to buy stocks, understanding various dynamics using fundamental and technical analysis. My name is Rohit and welcome to Valuable Direction. In case you missed, here is a link to part 1 of the video where we talked about simple investing styles with major considerations. I'm sure you're gonna like that one as well. The purpose of this video is to simplify for you the important points what you should keep in mind before you put your money in any stock. You can't predict the possibility, but you can increase the probability of your success and your profitable investments using these methods. If you're a new investor or already a pro, you can take some insights and reflection points from this video. So watch it till the end because I have covered some major points and thoughts that could clear a lot of doubts automatically for you. You need to develop a thinking. If you have already invested $1,000 and if you plan to invest $100,000 over a long time, then the risk of losing money because of bad decision goes higher now. So you need to be more educated before those big inflow of money comes in, and this is also one of the main aim of this channel, Valuable Direction. So if you're enjoying the video, don't forget to smash that like button because it helps the channel in many ways. So now let's get going. You must have noticed a lot of stocks from 2020 and 2021 has been crushed badly, where you had put your money thinking it will have a growth story like Tesla. Because market manipulators know people have got free money and they're not educated enough that they will put their money into anything that's hyped. I'm sure you did buy them due to your conviction, but was your conviction on ground reality? You must have seen your profits turn into losses by 2022 thanks to these market manipulators. You can still beat them and make great money without taking too much of risk by doing some homework and considering few steps on how to buy stocks from this video. So the first and foremost thing is to find a broker that suits your needs. It totally depends which country you're living in and in which stock market you want to trade or invest. So after you've found a broker, if you're a new investor, you better open a cash account, not a margin account. I'll cover up the differences between cash and margin account in the upcoming videos. The next thing you should consider, what are the commission and the interest does the brokerage charge on cash and margin account? So once you've chosen the account and you know the fees, then you need to check what are the things available on that platform. Does that brokerage allow investing in crypto, stocks, options, futures and commodities? Generally, most of the brokers you trade or invest allow stock option, commodities and crypto on their platform. There are various brokerage platforms, but the famous ones are Interactive Broker, Charles Schwab, TD Ameritrade, Zerodha, Robinhood, Webull and etc. I personally use Interactive Broker for the minimum commission and interest rate, plus they provide various stocks around the globe in different markets. I also use Webull for their charts and crypto access and Zerodha for Indian market. So once you have finalized which broker fits your needs, you have covered the first step of investing and trading. The second thing you need to know before you invest in a stock, you need to understand the major rule that major investor talks about, which is buying stock is not putting money in a ticker symbol, but investing or owning a part of business. So if you do not understand a business, please do not put your hard money into that stock. You can start by noticing around you and ask yourself, is this business is changing or impacting people's life? How is it doing in the present? And what are the possibility that it will be still available in 10 years from now? And if you get a positive answer, you can research more now and write that down in one of the positive points. The next thing is to get to know the fundamental and technical analysis. But should you buy a stock without any analysis? The answer is you can. But once you have bought the stock, you should do some kind of analysis or before you put any more money into that stock. In fundamental analysis, you need to understand how much money the business is generating now and its expected returns in future discounted for inflation or risk-free asset. If it's established business like Apple, you should look at their income statement and cash flow statement. Here's an example of Apple's yearly earnings report, also known as 10K filing. It has most of the details about a business, their financials and their forecast. Initially, it takes a while to understand them, but after a while, you know exactly what to look for and you can do it in a very quick time. So in the financials of a business, you should at least see their net income, earnings growth, their margins, their cash at hand and debt year over year. They should be profitable if they establish businesses with stable growth. You should check, do they provide any dividends and how's their share buybacks over the years. Just for an example, like with my discounted cash flow method, I want to put more money in Apple when it hits the price range of $115 to $125, which can generate 10 to 15% returns for me in a long term. For growing businesses from their financial statements, You should see what are their profit margins and growth in future, and will they be able to pay their debts or sustain a slowdown in demand. Are their earnings growing and they have a higher cash than debt? You need to understand market works on multiples. Price to earnings if business is profitable, and price to sales if business is unprofitable but with future consistent growth. There are more market dynamics, but you can start with them. The main consideration with these multiples are that they are dependent on how market values them. If the market has free money with low interest rates, like in the past, market is ready for more risk on and gives higher multiple to these companies, and their stock prices skyrockets. But now, due to increasing interest rates, the high growth and high PE stocks have valuation compression. They have crashed and lost 60 to 80% of their value, for example, Square. So it is important to know that you should not accept the price the market is asking from you in short term, but what multiple you think is right and as per your analysis. So one of the most important rule in fundamental analysis is either the stock prices goes toward the valuation or the valuation come towards the stock price in the long term. So right now, if you look at the overall price to earnings of S&P 500, the whole market looks expensive, but there is always hidden gems in this madness. So stop looking at the stock price just as a number, but as valuation of a business. The next thing is technical analysis. It's basically looking at the stock price on the chart and trying to find the area of value where the prices are close or equal to as per your fundamental analysis. So using the chart, I do apply lump sum buying technique. I make long-term support and resistance first, which is by connecting tops and bottoms of the candlesticks on 1 day, 1 week or 1 month time frame. And since the price work in wave pattern, I wait for the time till the price reaches my buying zone. And once it reaches my buy zone, I buy it, and even the price goes down, I don't have any regrets. I prepare myself for next 2 to 3 longer term time frame, support buys, and even the stock crash to 50% tomorrow, and fundamentally the things have not changed with the business, I can double down if I don't see any opportunity in the market. The idea is to avoid FOMO if the stock is moving up because it doesn't have any fundamental grounds. It is just being traded on the basis of technical analysis. Most of the daily trading happens using bots and algorithms, which tries to make money with difference in few cents but consistently the whole day. So the next way to buy a stock is to use put options, also called as cash secured puts. It's slightly complicated for a beginner investor to use options for strategy. To sell a cash secured put, you need to have a margin account and good liquidity. So let's take an example with Nvidia stock. I want to buy more Nvidia stock, but I want to buy it at $180 or below. But right now the price is at around $215, which is still high. So I will sell a 1-year put on Nvidia, which gives me a credit of around $3,000. So after 1 year, if the price of Nvidia is less than $210, I will own 100 shares of Nvidia at $180 because of the credit I received. The flip side is, it could go lower and even higher, in which case I will make $3,000, but the rest of the upside is lost. So for 1 year, if I want to keep my put, my $18,000 buying power will be frozen. This way of buying stocks is for experienced investors who wants to buy good businesses at lower price because it involves more money. There are various strategies with options which I will cover in more detail and in simplified approach in my upcoming videos. Personally, I try to keep 8 to 10 different stocks in my portfolio from different industries and different markets around the globe. But basically, I like to trade and invest in United States, India, Hong Kong and South Korea. It's a good combination of developed and emerging markets, including growth and value stocks and index funds. We need to be more selective with our stock pick and stick to good fundamentals with good growth. You need to understand, for every new hype stock, market manipulators use it as a growth story of Tesla. They always try to attract amateur and new traders and investors. But one has to know that investors who invested in Tesla had to go through crazy market emotions, but they kept checking and rechecking their conviction based on analysis. Tesla have crashed many times 50% and rebounded higher. So if you have a big stomach for that much of volatility, and you have a great conviction and insight into a company, you can also write a great investing story. But if the answer is no, then be very careful before investing your hard-earned money, because everyone is trying to get rich quick. It's a good idea and can be done, but you have to be super risky and lucky or super smart. Knowledge helps to plan and avoid poor decision. As we know from the previous video, even wrong timing is not bad, but poor choices are. One of the example of bad stock is a stock called Nikola that shot up to $90 and now it's back less than $10 thanks to the forgery done by its previous CEO. So the next thing you need to consider in today's time is recession. Everyone is talking about recession in United States, but try to understand it in this way, that there is a recession and stock market crashes tomorrow, and good quality stocks also comes down with the whole market. So let's look at it with a different perspective. If you are planned and you can take advantage of the crash and the bear market, you might get a longer buying opportunity where there is no rush to buy. You can keep adding small investment during that time, because after all the bad noises and negative catalysts subsides, the bull market roars and generate massive returns. Even in the times of recession, market have produced returns 10 out of 11 times. So don't panic, but be prepared if all it happens, because it does happen all the time. In the past 20 years, there were 3 recessions and 5 major crashes, either due to various world events or poor management by the central banks and the countries. Still, the markets did what they're supposed to do, that is to go up in long term. Another thing we need to understand in today's market dynamics is Federal Reserve is not our friend anymore. So no more free money available for investment. So bad choices may not be rewarded like in 2020. Even after interest rates hike, market have produced positive returns in next 12 months. Since May of 2021, market has been continuously dumping risky, unprofitable, poor earnings and high PE stocks. So with the fear of interest rates hike, market move away from risky assets and move toward businesses that have pricing power. Companies like Amazon, Walmart, or businesses involved in general daily utility products and food companies have done better in higher interest rates times. But lots of high retail stocks has been reduced to penny stocks by big institutions or market manipulators. So you have to be really careful with your choices of stock now. I hope you enjoyed the video and got the value provided. Do mention in the comment section what investing style you follow and when and how do you buy a stock. So don't forget to like the video and subscribe to the channel. May the market makes you more wealthy. God bless you all. See you in the next one.